Thank you. This is Digital Marketing Depot, broadcasting live. I am Chris McDonough. Thanks for joining us for an informative webcast to help your agency grow its retainer-based business. We are very happy to welcome today Karen Burka and Rob Eleveld. Hello, everybody. How are you guys doing today?
Great. Looking forward to this.
Yes, me too.
Good, Karen, good. Well, we'll get to Karen quick. Just let me tell you all just a couple things to make sure you can view everything the best. Hang on, let me get this next. There you go, the viewing tips out there. If you need some help or have a question for our speaker, just use that Ask a Question box, and we'll do our best to help you out. If you want to tell a friend or check out Optify or Digital Marketing Depot, there are some widgets at the bottom of your screen. A special note for all of you who are looking for some more information on inbound marketing, Optify also has a few white papers available for download in our DMD white paper section. So you can use that little widget on the bottom of the screen and check out all the resources we have available for you there. We are recording this broadcast, and I will make it available for viewing on demand this afternoon. I'll let you know when it's ready, or just make sure you go back and check our website at digitalmarketingdepot.com and in the webcast section, and you'll see it right there. I'm sure Karen's going to also let you know of an exciting report that's out today, too, when she gets going, but I'll let her tell you about that. In the meantime, let's get started with trying to find out a little bit about our audience today. What percentage of your current revenue is from retainers? Less than 10%, 11 to 25, 26 to 50, 51 to 75, and 75% are your options there. Just hit one of those radio buttons and hit Submit Answer. And while I'm waiting to tally those results, I'm going to do some formal introductions here. Rob is the CEO of Optify. He is a 20-year tech veteran with deep experience in B2B sales and marketing. Rob is a real passionate guy about growing businesses through partner channels at Optify, and excited about an opportunity that inbound marketing affords to forward-thinking digital marketing agencies. Next up, and first up for speaking for us today, will be Karen Burka. She's an experienced research analyst, writer, and editor, having spent more than 20 years developing and publishing C-suite multimedia content. Karen has written numerous ebooks, articles, buyer's guides, and market intelligence reports on digital marketing strategies and technologies. There's plenty more information about our speakers in the bio section on the left side of your screen if you care to check that out. I also want to make sure that I tell you a little bit about our sponsor and thank them very much for sponsoring us today. Optify is a leading innovator and award-winning provider of digital marketing software for B2B marketing professionals. Their SaaS-based digital marketing suite of tools provides a completely integrated solution for maximizing, measuring, and reporting on inbound marketing, marketing automation, and sales enablement. Optify is specially designed for digital marketing agencies and small to medium-sized business customers. Thanks again for sponsoring the webcast today, and now I think we are ready to see those results. Wow, it looks like we've got pretty much split across the board here. Karen, does that surprise you?
I am surprised, and I think it's a great sign, though, that so many of the members of our audience seem to be leveraging the digital and retainer-based revenue opportunity. So it sounds like we've got a smart audience, and hopefully we'll have a few tidbits to add to their arsenal about retainer-based businesses.
Okay, Karen, so I'm going to go ahead and push out your first slide and just turn the reins right over to you.
Thanks, Chris, and welcome to everyone in the audience. I am very pleasantly surprised by the results of our poll numbers, because it does tell me that a lot of you out there are already leveraging the opportunity to grow your retainer-based businesses. As Chris mentioned, first off, in the little bit about my bio, I do a lot of work with Digital Marketing Depot, the research arm of Third Door Media, and we have just today published a buyer's guide on the digital agency market. So I have spent the last few months talking to many, many agency executives and advertising executives about what's happening in the landscape for digital agencies and the digital opportunity in particular. And the news is all good, as I'm sure a lot of you out there know. I thought I would begin by setting the stage for our discussion with some information about how big this opportunity is by quantifying it a little bit with some of the statistics that are out there. If we look at digital revenue as a percentage of total agency revenue, we can see the digital slice of the pie is growing. Now, digital revenue grew 16.4% in 2011 to $10.1 billion, growing to 30.3% of all U.S. agency revenue, and that compares to 28% in 2010. Now, these numbers come from Ad Age's data center, which compiles data annually on nearly 1,000 agencies and agency networks. And in their numbers, what they define as digital agencies include pure plays, search agencies, social media, and mobile marketing agencies. Those type of agencies accounted for 6 of every $10 in digital spending, or $5.9 billion last year. There we go. Now let's look more specifically at the results for 2 of the world's largest agency holding companies, Publicis Groupe and WPP, which own numerous digital and traditional agency brands. Now, digital accounted for 30.6% of Publicis Groupe's 2011 worldwide revenue, which is up from 28% in 2010. If we look at WPP's numbers, they saw digital, direct, and interactive revenue grow to 29.7% of their 2011 revenue, compared to 28.9% in 2010. Now, these types of holding companies represent sort of the high end or enterprise end of the market, and they've largely grown their digital capabilities through acquisition. Publicis now owns Rosetta, Performix, Razorfish, and also social media agency Big Fuel. So they've come into the market in a big way, choosing to buy rather than build their digital capabilities. Another way to look at how the digital opportunity is growing is by revenues, advertiser revenues. Now, advertiser adoption of digital media has driven record revenue for online publishers and ad networks. And we're looking at the Internet Advertising Bureau, or IAB's, numbers for 2011. They found that overall U.S. Internet advertising revenue reached $31.7 billion in 2011. That's about a 22% increase over $26 billion in 2010. Now, the IAB's total includes revenue from websites, ad networks, commercial online services, mobile devices, email providers, and other companies selling online advertising. And while these numbers represent a subset of all media services provided by agencies, they demonstrate just how quickly digital advertising continues to grow. So what's driving this trend? Why is digital becoming so big? Besides the obvious that all of us and everyone we know walks around with several mobile devices at any given time. Basically, more advertisers and marketers are looking for help with their digital strategies. Social marketing used to mean a Facebook brand page. Now it means coordinating a consistent brand presence on Facebook, Pinterest, LinkedIn, Google+, YouTube, and Twitter. SEO has spawned a new channel of content marketing as marketers compete to generate traffic and attract customers. Digital maps and applications for local markets like Yelp or Foursquare have changed marketing at the local level. And when you throw mobile into the mix with its unique design, development, and distribution requirements, you've got a very confusing marketplace. I'm going to jump ahead to my next slide. Here we go. Now, this is a chart that comes from the agency report that I mentioned. Hopefully, everybody can read it. If you can't read it that clearly or you're more interested in it, you can go to the Digital Marketing Depot site and download it for just, it's a free registration. Clearly, this kind of market is difficult for in-house marketers, particularly those who operate in siloed departments within the enterprise, to figure out. You've got all these different digital channels, and within each digital channel, you've got multiple capabilities and multiple responsibilities. Consumers are on all of these channels, and they're no longer stationary, so cross-channel integration has become critical. Marketers need to target prospects and customers wherever they are, whether they're outside the dry cleaners and want to find out if a friend can meet them for lunch, or if they are in Best Buy comparing television sets and looking for a mobile online coupon that may sway their decision. Both of these factors have created greater demand for integrated channel campaigns. You can't have one message on your website and another on your smartphone app and another on your Twitter account. Digital marketing requires a consistent brand message to be effective. And digital media is measurable. I'm going to go back to take a look at where I'm saying this. Digital media is measurable, and with tighter scrutiny of the ROI by C-level executives, the accountability that digital campaigns in search, email, retargeting, and more provide have become much more attractive for marketers. The other point I wanted to make, and that's relevant for our discussion today, is that the interrelationship of all of these digital channels is changing the way that agencies get paid. Traditionally, we've talked about paid, owned, and earned media. Now, paid media, of course, refers to advertising that's purchased, such as print, web, or broadcast advertising, while owned media belongs to the brand, such as your print brochures or website content. Earned media comes from the good or bad publicity in a newspaper article or broadcast news segment that includes your brand. But what's happening is that the integration of digital channels has blurred the lines between paid, owned, and earned media. Again, this is another chart that we've created in our report that you can spend a little bit more time with when you download the report. This chart illustrates how these digital media intersect and ultimately impact compensation. For example, Twitter is a social media channel, which can be considered owned media, but the brand bounce that occurs from retweeting becomes earned media because it furthers brand awareness. Paid media now includes content marketing campaigns or sponsored messages on social media channels, as well as the more traditional display or paid search advertising. Social strategy and mobile programs are closely linked, as are website and social or mobile app creative development. All of these media are converging, which has made it harder to keep them separate and also make payments and compensation arrangements separately as well. The result is that we're seeing more hybrid compensation deals that acknowledge, particularly through retainer-based compensation, the time that needs to be spent on digital programs, such as SEO campaigns, that take a tremendous amount of staff time to research and monitor keywords in their rankings, and therefore to show results. We're also seeing more performance-based bonuses along with those retainer deals that recognize the risk involved when agencies think outside the box on strategic paid search or paid social programs. These types of hybrids are better designed to meet client demand for more integrated campaigns that cross those media boundaries. And they provide clearly defined fees that better reflect the work involved for the agencies. And that's really the incentive when it comes to retainer-based work, that you can get compensated for your time and not be so dependent on the results. So with that, I will turn the presentation over to Rob, and he's going to talk more specifically about the benefits of growing your retainer-based business and exactly how to do that. So Rob, I'm turning it over to you.
Hey everybody, this is Rob Eleveld, and I'm the CEO of Optify. Thank you very much, Karen, for turning it over. And Karen and I are a good set of bookends here because I've spoken with Karen and known Karen for most of this year, and we had a talk early in the year about just how fast digital marketing was growing, and as a result, the growth of digital agencies to support the market demand for how fast all these digital marketing services are growing. And so sort of the bookend we have is that Karen has taken things from a sort of high-level look at the market in terms of data research analysis from known data sources and so forth. Very sort of top-down look at the market with a lot of data that I don't have access to or that we don't have access to here at Optify, but at the same time, we look at things in the digital marketing agency world really from a bottoms up, starting with, the customers we have discussions with day to day, the prospects we have, folks that approach us, folks that make comments on our blog posts or other things. So the second half of this, I'll give you a little bit of sort of, at the ground level, the blocking and tackling that we see going on out in the market every day. And come at this from that direction. So hopefully you get the other side of that bookend that Karen provided a great lead into. So the first thing is just really simply stated, what is better for any type of agency and their clients? Is it a project or is it a retainer-based service? And that the answer is obviously a lot of gray area, but I think consulting across the board, not just in digital marketing agency world, but in the agency world or in any other services business, and frankly, I've run a services business of my own and been a consultant before, so I've got some firsthand visibility into this. But I think the world thinks about consulting as projects first. That doesn't mean that every agency, like the first polling question had, there are a broad span on the audience right today of folks that provide whose business provides retainer-based services more than 50% of the time, and a lot of folks that provide it less than 50%. But I think in general, most of the consulting world, including marketing agencies, thinks first about projects. And we're, of course, here today to talk a little bit about retainer-based services. So if we go to the next slide, there are some advantages to think about, not just for your own business, but also for your clients that we see in retainer-based services. So I think, to start with, the first advantage for an agency is more visibility on cash flow and ongoing client relationships that allow you better resource planning. How many team members you need in certain specific areas, because you've got some visibility over the horizon beyond next month or next quarter in terms of how many clients you're going to have providing certain levels of retainer-based services and so forth. So on the agency side, you've got more predictable income, less ups and downs in your cash flow. We've all known scenarios where you land that big client or you get a couple big clients. They have a lot of needs on a project. You staff up for that project, or you align most of your resources to that project. You bill a lot for a couple of months. And then suddenly you begin to see that project start to decline in needs. You sort of go over the hump, and you're sort of on the downward swing in terms of the number of billable hours or services required for that project. And now you're scrambling to find another project because all of your resources that were dedicated to that first project are starting to not have as much billable time allotted, and there's sort of this classic up and down of the sine wave in terms of resources and cash flow. And so one of the things that retainer-based services obviously do is help balance that out. Now, that's great for your business, but frankly, do your clients care that much about that? Probably not. But what they do care about is most clients, they would prefer to budget on a monthly basis so they don't have big spikes. And specifically, most clients you're working for, you're going to be working for either the owner-operator of a small business or you're going to be working for a marketing department and a marketing budget. And in general, it's easier for either of those types of budget owner to budget for monthly sort of steady fees as opposed to big swings on certain projects. And so it's the same reason why most of us opt for a sort of a mid-level monthly cell phone plan where oftentimes we won't use all the minutes, right? But we'd rather do that than have a low cell phone bill 4 months in a row and then have a huge spike in our cell phone bill because that 1 month we went over our minutes allotment, right? And so I think your clients will think like that as well. So as you're thinking about how to position with your clients the value to them, you're talking about predictability on the expense side, ability to budget for your services, and so forth. The other things are, if you look down this list, this sort of mix of long-term engagement on your side and on the agency side, and a trusted relationship on your client side. So, think of your clients looking at you as an agency and your team as more of part of the overall team they deploy for their business, right? And less of, hey, I'm going to bring in this agency to do this specific project. They're going to be in and out, right? Because that's really what builds that trust and also allows your clients to think of you as an ongoing resource that they can leverage as opposed to a one-time resource. I think that is valuable on all sides, because anybody that's in the services business, your relationships with your clients are absolutely paramount to the ongoing health of your business. But also, speaking both personally and from a lot of agencies we work with, I think that's a lot of the sort of personal value that folks at agencies derive from going to work every day, is working for their clients, being close to their clients, getting great results for their clients. And so, thinking about providing retainer-based services really helps on that front as well. And then finally, you all, I know that there's times when you get into something, your client asks you for something you're not exactly an expert in. But what I would say is, whether your client's a marketing department or whether your client's a small business owner, in general, you have more access to be able to research something, be able to network on how to perform a certain service that you may not have done before. You think about this all day long, every day, and so you have the ability to provide a flexible set of services. And what your clients can look to you for is, hey, I need to try new things. I'm thinking about doing this. What do you think? Can we experiment a little bit over here? That's where that trusted relationship comes in terms of sort of relying on you to be an instantaneous expert in certain areas. Even if neither of you have actually done it before, think of yourselves as much more able to piece something together quickly, to try something, to do research in certain areas and so forth. So those are some of the areas that we see that are benefits to clients as well as to agencies themselves in terms of retainer-based services. And so think about that for the benefit to your clients, because that's always important if you're going to get more retainer-based services. Now, before we move into sort of these 6 tips, let's talk a little bit about how, we here at Optify, having spent a lot of time in the agency market, we sort of have bucketed the market in 3 major buckets. And I'm guessing we have folks from all 3 of these different segments on the line today, but I'm going to refer to them a little bit going forward here in these tips, so I'm just going to describe them here really quickly. The first one is, there's some of the what I would call usual suspects in the top bucket that Karen referred to, the WPPs and the publicist groups and all of that sort of stuff. And that's what we would call the brand agencies. They're big, they're well-known. They have obviously a lot of subsidiaries that they've acquired over time that maybe now carry the overall brand, or maybe they retain their independent brand. But bottom line is, we would call those kind of the brand name agencies. And they have national and international coverage. They can support clients that are national and international in needs and so forth. The second segment of digital agencies is more of what we would call a regional agency. And that regional agency may have as few as 25 to 50 employees, or upwards of a few hundred, but it's certainly not on the same scale as WPP or Publicis. And we see those agencies as usually in maybe a couple metro areas, servicing a couple metro areas, and that's really where their client base is based out of, because as we all know, a lot of this is referral-based business and relationship-based business, so they're developing relationships, referrals, and kind of a client base in a couple metro areas. That agency as well may have sort of the traditional creative side and other things on sort of traditional marketing, as well as the digital side. Note that when Karen gave her breakdown of sort of Publicis or whatever at 30% digital revenue and the rest traditional, the regional agencies may probably have, in our experience, maybe a little bit more like a 50-50 split, because they probably weren't as established on this sort of traditional marketing from 5 or 10 years ago, and they have less of that business to start with. So their split is brought, more towards the digital side. And then finally, down below that, we see just a huge long tail of sole proprietor agencies. And sole proprietors are, what we define as basically any agency below about 20 employees or contractors. And usually it's a single owner or two partners that have, maybe left a larger agency or were inside of a marketing department of a company and split away and started their own agency based on the market need out there. And they're typically in one metro area. And a lot of times that sole proprietor agency may not have any creative, right? They really started in their pure play in digital marketing services. At Optify, we spend the most time with sole proprietors, and we also spend quite a bit of time with the regional agencies. We are not as expert in terms of the real big brand agencies. That's not really as much our partner network. We certainly have some relationships with those folks, but they tend to have a little bit different, very deep needs than say what our software provides, and so. But we do provide a rich software-based experience and an API for managing very customized reports for the regional agencies, and we also do a lot of work with sole proprietors where they're standardizing on a single platform. They've got a lot of junior employees that they need to sort of standardize and so forth, and so that's a common thing. So these tips, I think, will be applicable to all three of those buckets, but if you kind of keep them in mind, you can probably place yourself into one of those. And if you have any questions on a specific segment there or anything else that we go through here, just remember to submit questions, and the last 15 minutes of this webinar will be a Q&A process. So we've got about maybe 15 more minutes here of slides, and then we'll go into Q&A, and feel free to submit your questions. It's always easier for me if I know kind of where your perspective is coming from your question as well. So if you're a brand name agency or a subsidiary, or if you're a regional agency, or if you're more of a sole proprietor type of agency, that's helpful. Okay. So next slide. First tip on moving from projects to retainers. Whatever relationship you have with your client, whether it starts with a very specific need, and let's be honest, in consulting and any kind of consulting, including being an agency and providing services, a lot of times you will be brought in, your entry point is some very acute need, right? Something that a specific problem that your client has identified and needs solved. And so a lot of times that first need may be a project, right? Maybe a common one we see a lot is website redesign, okay, or a website launch, right? That's a project usually. Or, boy, I really feel like I'm just hearing so much about social media. I need a social media presence. I don't know where to start. So can you sort of define an initial project to kind of kick off my social media presence? Or, there's a number of others that are like that, but you get the idea. Regardless of how your relationship starts with your client, whether it's an acute need that they have and they got referred to you or whatever, as soon as you can, elevating your discussion with them towards their business needs and their business objectives, as opposed to the very specific need they have around that pain point or that project, it will be very helpful going forward in helping them understand why a retainer-based service may be valuable to them. So as soon as they come to you and say, we're getting a lot of complaints about our website, it's been the same for 3 years, we just need an overhaul and a redesign. Instead of saying, well, we can do that for you, what you might first respond to is, help me understand what you use your website for. What are the top 3 business objectives you get out of your website? Is it to market new services to your existing client base, because a lot of them come to log in or something like that, or come to get help or whatever? Is it expanding your presence into different market segments? Is it just purely to drive leads? Is it advertising revenue because you're more of a publisher business model and you sell a lot of advertisement and at a CPM rate on your site? What are the needs of your website? That's a specific example. Okay, you want a social media effort. Tell me what the goals are, how that marries up to maybe one of your top 3 or 4 business objectives for this calendar year. as soon as you can get there, you're starting to uncover what really drives your client, how they're allocating budget, where they're thinking about putting resources and time, how much executive sponsorship you'll get on anything that you do for them. And that really starts to set up the foundation for those trust-based relationships. So tip number one is just really focus up level from specific deliverables on a project to business goals and business objectives to your clients. Okay. Step number two is, being able to provide tailored service. Here's a picture of something that's not really a motorcycle and not really a car, but something in between that a specific client may want, right? And one of the great things about being digital marketers is your clients may have a broad span of needs, and you can tailor something for them, especially if you understand some of the aligned business objectives they have for that. So let's talk about just a few, sort of tangible aspects here in terms of tailored services. A client may say, look, I want to have, I want to develop a long-term search engine marketing strategy. And now search engine marketing, usually, if the client knows the terminology, and don't assume they do, you might want to ask them to define what they say is search engine marketing. But I think we all here on this call would define search engine marketing as a combination of pay-per-click and search engine optimization. And so that to start there, you need a little bit more of, well, how much? Okay, so you want a search engine marketing strategy. Do you have a target of how many leads you want to drive from that on a monthly or quarterly basis? Do you have a baseline of how much, your leads cost a day, and how much resources, internal or external, in terms of budget, headcount, or whatever you might commit to that? Because clients may say, we want to slow roll it. We want to experiment, not chew up a lot of budget early on. We want to spend a quarter getting data at small levels and then learn from that data and expand the initiative going forward. Okay, that's great information. Now you can tailor your service to not chew up a whole lot of budget early on. You're sort of going to build some trust. You're going to gather some data. You're going to work with the client on how to modify that service. But you can tailor the service to meet the needs. We're going to talk further on here about the difference between something as very sort of specific as search engine optimization or SEO and something more broad like an ongoing service that combines search engine optimization, content management, and social media in a combined initiative. So just keep in mind that you can tailor your services, and one of the advantages you have is generally a number of employees that you can sort of pick and choose their expertise areas, or a little bit of this person on social, a little bit of that person on content management. Your clients very rarely have the ability to pick and choose sort of part-time of their folks here and there. So they have less ability to tailor the service than you do. Now, tip number 3 is market your service. Boy, this sounds like, thanks, Rob. Really appreciate that. Really great insight here. But you would be amazed how many agency partners we have in the sole proprietor world and in the regional agency world, frankly, that don't really market themselves very well, at least in terms of their website, in terms of talking about the certain types of services they have, in terms of client case studies, those sorts of things. I think this is a fundamental result of, as we all know, a lot of clients come from referrals, and a lot of clients come from, very specific. We sit down, we have a cup of coffee with them because of that referral, and we start our relationship that way. But one of the things that I think a lot of us are learning about, what might be called the buyer journey or anything else, is that you should probably expect that before someone's willing to even sit down for a cup of coffee with you, they're going to do some background on you and your agency, right? They're probably going to check your LinkedIn profile. How many folks have updated their LinkedIn profile with some real specific meat about, kind of what types of services you offer in your current role, right? Or what type of services your agency offers. Because figure that, I don't go to a business meeting anymore, anything, cold meeting, someone who was introduced to me over email without checking their LinkedIn profile. You should expect that every one of your first meetings, someone will have checked your LinkedIn profile, maybe even before agreeing to the meeting. Next thing they're going to do is they're going to go and check your agency, what your agency offers. Is there anything they can glean there? And if your agency, if the first impression is, boy, this is sort of a website that hasn't been updated in a while and doesn't really, I got referred to these folks for social media, and all they talk about on their website is, pay-per-click advertising, right? Because you started offering social media services maybe last year to a couple of clients, but you didn't bother updating your website. They're going to scratch their head as to why they got referred to you. So I would just encourage you all to prioritize keeping your websites and your LinkedIn profiles at a bare minimum up to date. Now, beyond that, you can do things like, be local experts and get involved and network in terms of local networking opportunities where you may have a chance to speak at a luncheon about digital marketing. Or you may have time you may be able to get interviewed as an expert in a local business journal on the growth in digital marketing. Or you may get invited to be on, a webinar like this as an expert, or that sort of thing, or a radio spot for the local NPR affiliate. Who knows what? But those are the types of things that really add some value and ability to market your services. Okay. So the next piece here is, cost-effective and flexible integrated services. Let's just break down really quickly what that looks like in terms of flexible and integrated. First of all, you should always consider in a retainer-based service that your client is comparing you against bringing that service in-house. That is your number one comparable. And so there's two things that almost always help that discussion that are in this slide. One is cost-effective. Cost-effective isn't necessarily that you have low billing rates or high billing rates or anything like that. More, it's in terms of, if I was to do this in-house, it would require me to have a dedicated headcount or a department that's committed to this, or 5 people to execute this big project, or this big ongoing engagement or whatever. And in general, an agency can use a little bit of this person, a half a headcount here, allocate resources across clients because you have some visibility due to your retainer-based services, and all of your resources don't get sucked up into projects, but rather they're sort of split out, that you can provide more of a cost-effective approach to a specific business objective and a specific need of that client. And the other thing is flexibility. Usually when you go out and hire folks, you don't get to put this sort of smorgasbord of, I want this person to be really knowledgeable in social media. I want them to have great writing skills and ability to create content. They need to really have a deep background in search engine optimization. They need to have run pay-per-click campaigns and image advertising and know some of the latest trends there across the board on ad networks and so on. And they've hopefully got some direct marketing skills and email marketing and so forth. That person doesn't exist, right? That job description is irrelevant, but your agency can provide that across 4 or 5 folks, okay? So that's where that flexible comes in, and where you can really position the value to your client relative to trying to, bring that whole that initiative in-house. Okay, the tip number 5 is provide proof points, and all this is an Optify screenshot of what's going on your website in terms of traffic and site visits and leads over time. Okay, and that over time might be in weeks or in days or in months or in years, but it depends on the ongoing relationship with your client. But one thing clients love is the fact that you have some metrics that you measure on a steady basis that you give to them, good or bad, and usually what we see is monthly. Okay, in other words, you define a set of sort of measurable metrics that you're going to provide to your client every month. based on the objectives of the project or service you're providing. And again, on a retainer-based service, and again, sometimes there are months where those metrics aren't going up and to the right, because the business might be seasonal, or because, things sometimes when you're trying to change things on a website or whatever, things get a little bit, they go down, they dip a little bit before they improve. And oftentimes what you may want to say is, hey, let's spend a couple of months gathering data and getting a baseline before we start putting specific objectives against this, or not. It may be, but either way, your clients love proof points and ongoing measurement of success or lack of success, frankly, but in general, you're going to be better off in building that trust-based relationship with reporting on a monthly basis or at worst a quarterly basis without sort of doing it ad hoc, but rather on a consistent basis. And that's also a great way to check in with your client every month and reaffirm some of the business objectives, making sure those haven't changed, because you'll have an idea about that. We have on our blog an ROI calculator for different digital services, and so if you search on a Optify ROI calculator, we have a blog post and a downloadable spreadsheet just on something like that as an example. So there's a lot of different things here that you can do, but again, providing metrics and checking in with your client on an ongoing basis from a reporting standpoint is super valuable. Last tip is always maintain good relationships. Now, in our agency partners, I would say that for every, I would say 1 out of every 3 clients is in sort of the inactive bucket. In other words, they're not billing right now. But that does not mean, obviously, that you don't want to have a good relationship with them. In fact, you're providing those proof points, and if you and your client come to the realization that, hey, we're not getting the type of return we thought on this particular service, you're better off in the long term in building your business, agreeing with your client, hey, let's call it good on this project or this service. We spent 6 months, we didn't get quite where we wanted to go, but your client will absolutely respect you for that. Your client is more likely than not going to refer you somewhere else. And the other thing is they're going to trust you the next time they want to experiment with something to bring you back in. And so, maintaining the relationships, even if you're not billing that client, is key to building that trust in your community, in your network, and in your referral base. Okay, a couple quick ideas here on ideas for packaging retainer-based services. You can either offer sort of a whole suite of services, or you can package up specific service bundles. This is where kind of that different segments of agencies does come into effect. At the sole proprietor level, we find a lot of agencies that sort of started, or their sort of main principal or founder, owner, operator has a specific background in something, website creation, search engine optimization, advertising, that sort of thing. But in general, if your client base is more tied to a local metro area, you're probably going to want to expand your services offering in a simple way and be able to offer so that if your client says, hey, I know we were talking about search engine optimization, but you know what I really need is I need to get started with just marketing my current client base and I'm wondering at customer base, and I'm wondering if you could start by offering a monthly newsletter to my customers. That would be a big help to me, right? I don't have someone in-house to do that right now. Boom. Okay, that's a different service. You're not a specific expert in that, but you know what? You can pull together a monthly newsletter probably better than they can and do it in an efficient way and flexible way and so forth. So that's where sort of, being able to offer sort of a wide range of services and be flexible about it helps. Now, as you move up into the bigger agencies and the brand agencies, they often have a lot of specific business practices and very deep areas of expertise and clients that are referenceable in those specific areas of expertise. And then you may want to provide and be very specific about some of the discrete services that you offer that really differentiate you and so forth. And in the regional agency segment, there's probably a little bit of both, right? There's some things that you do very well, and there's also the ability to be flexible and and tailor something to a specific client that comes to you. So that's where that sort of trade-off is. Pricing. Boy, we get all kinds of questions here about pricing retainer-based services. And, we have agency partners that price all the way down, in the $500, $750, $1,000 a month level, and we have regional agencies that don't start for less than $10,000 a month on a retainer-based service. And we don't really, I'm sure at the brand level, there's a lot of agencies that probably don't get started for less than $25 to $50 a month. So it's all over the board. But I think in terms of what's important there, understanding what your cost structure is and how you can provide services with a gross margin on an ongoing basis is good, number one. Number two is you don't necessarily have to publish your pricing or your bundles or whatever, but the more that you can, you will save yourself time ongoing, and you will also build trust with your client base if you can be a little bit more specific and less ad hoc in customized pricing for every single client. Because you'll know better your costs, you'll know better what's good business versus bad business for you, and so forth. And so whether you publish it or not, having some ideas about specific integrated services offerings and what might be included or not included are usually helpful. In terms of, if you go now to discrete services and bundles, this is where, you really can put together some things that you are kind of experts in. And one of the things we see here that is this example here of the difference between content development, content management versus really sort of a package service bundle. Content management in and of itself is interesting, helpful. Maybe you get some people to follow you, look for you as an expert, whatever. But boy, if you can really marry it up to, okay, let's talk about content management in the context of creating content that is optimized for search, creating content that can be pushed out on social media channels because you're creating just new content on an ongoing basis so you can get more social media following, and increases your presence in terms of being local or national experts in certain areas. That's an integrated approach that really sings to the client's business needs, and it's something flexible. It's hard for them to bring in-house. Okay. We already talked a little bit about this, but just really knowing your own cost structure, number one. Having an idea, whether you talk about it specifically with your clients or not, and this is, by the way, our last slide. We're going to get to Q&A. But having an idea what your cost structure is so that you know what's good business for you, but also what it would cost your client just high level if they try to do it themselves. I think that helps them frame the business decision on why they would want to work with you. And again, when you're flexible with them on pricing, you give them a couple of options, that allows them to be in the driver's seat of the choice rather than sort of being, shoved in. I mean, one of the advantages you have is being flexible within some kind of boundaries. If you know your own cost structure, being flexible on, how much or how little they want to consume every month or every quarter, or like I mentioned earlier, they may want to get a baseline for a couple of months before they start to ramp, or those sorts of things, and you can give them some options there. Okay. Is there anything else we've got here? Just simply stated, we've got a lot of different resources. We've actually got a white paper on different services to offer. If you come to our blog or our website, there's a lot of things for agencies there in terms of helping with creative ideas for retainer-based services. We obviously focus a lot on providing a suite of software that agencies can use across a number of different retainer-based services they offer their clients. They can standardize on a platform as opposed to a lot of different point solutions and 7 or 8 different logins, and needing to train folks on, a lot of different things that they need to learn in order to provide services to their clients. So please feel free to come talk to us. And with that, I'm going to turn it back over for questions.
Okay, good. Thanks, Rob. And Karen, I would like to make sure you're back on board. You here?
Yes, I am.
All right, terrific. Let's get to some of the questions we have in the queue, and let the audience know. Of course, you can submit your questions anytime. We'll see what we can get to in the last few minutes we have left here. So go ahead and submit away. Here is our first question. On average, do prospects tend to go with agencies that have some kind of pricing structure on their site versus those that don't?
I'll take a quick cut at that. I think it's the vast majority of agencies that we see out there don't publish pricing, and so I think that the answer is I think a lot of agencies win a ton of business without publishing their pricing. But the agencies that do publish pricing, one of the things, at least for a couple of core services, it gives the folks that are sort of considering working with that agency, it really allows you to say, hey, we know a couple things we're really good at, and we do it often enough that we feel comfortable giving you a pricing structure for it. And so it gives the client or the prospect confidence that you really understand a couple of key aspects of your business. You're confident in them. You're confident in the value you provide at that price point. So, again, it may be that you don't even publish it on your website, but you have some kind of a one-pager that you can bring to meetings or coffees or send over via email after a phone call that gives a standard pricing structure, and it just earns trust with the prospect.
Yeah, I would just jump in and add to what Rob has said that we tend to see when agencies have pricing structures on their sites, it's geared more towards smaller businesses, the SMB market, and I would say that most of the time large enterprise pricing is much more customized, and therefore that's not going to be on a website. But a lot of times when you're talking about more of the mid-market or small market types of services or agencies that cater to that market, as Rob said, sort of the first bucket, or I should say the third bucket, the smaller companies that you can find pricing on agencies that'll cater to that market. So it's more about the character of the potential client, I think, than that rather than their capabilities, what market they're catering to.
All right, that makes sense. Okay, here is another question. Get this out here. There it is. What do you see as the most common model for packaging retained services?
Boy.
Is there such a thing? Or is it all unique per client?
I think it depends on three things. It depends on, in terms of, common is really defined for your business or your business and the market you target, which might be regionally based or metro area based or vertically based. You maybe just provide agency services for healthcare companies, for instance, or something. But I think it is specific to the market you target, your specific skills and value you can provide, and who you most often compete against. And that may not be a named competitor, but it may be sort of an alternative. You may compete the most against in-house. You may compete the most against some other agencies that specialize in a vertical market. You may compete most against some other local suspects that you've lost business to in the past or whatever. But the bottom line is, I think those are the three variables: your own expertise and knowledge and what you're really good at in terms of retainer-based services, the market you target, and what you compete against, or what are the alternatives that a client may have besides using your retainer-based service.
Yeah, I would just again add on to that mostly what we see with retained services, because they're usually a little more time intensive, is a time-based or flat fee component of a total compensation deal, because a lot of times the retainer services, retainer-based pricing will work for the earned or owned media, as I talked about originally in my slides. And when we talk about paid media, a lot of it is geared more towards some of these performance incentives. So, I would just say that when you're looking at more of a set fee that can be more predictable, a lot of it is often time-based, or just a flat fee that takes a lot of pre-thought going into what the agency thinks the amount of time they're going to spend on it is, as well as what the client thinks an adequate amount of time and effort is to put towards the work to achieve the goals that both client and agency agree on.
The one thing I would add to that, that's good feedback, Karen. The one thing I would add that I think clients are less, I think that in your mind is when you're packaging up or making an offer for retainer-based service, you have to sort of have some kind of average time that that your team is going to spend on it, because obviously your gross margin on the business and your resources are based on billable hours at some level. But I think that in general, clients don't want to know that, hey, we're going to put 20 hours a month into this, and then we're just going to kind of call it good, whether those 20 hours are expensed in the first week or the ongoing basis. I think they want to know that they're going to get some amount of deliverables on an ongoing basis, and they and you both know that 1 month it may be that you need 25 or 30 hours to really get it going and spooled up, and there might be a month in there where you're only providing 10 hours, but it averages out over time. But I think in general, exposing exactly how many hours you're going to give to it is not necessarily, number one, what the client cares most about, and secondly, they sort of don't want to know that at 20 hours you're just going to call it full stop for the month. They kind of want to know that you're there on an ongoing basis, and that it sort of is going to move up and down a little bit, but you're providing things on an ongoing basis as needed to get the results that you need. And then your job is to just manage expectations in terms of, based on the price, what kind of results can be achieved. If it's content management or earned and owned media like Karen was mentioning, providing some expectations on how many blog posts or how many white papers you're going to get out in a quarter, as opposed to sort of how many hours you're going to spend writing white papers or blog posts. That's a better, more palatable to the client to know deliverables. And then internally for you all, it's about managing your business so that you don't spend twice as many hours as you sort of contemplated when you priced the service, giving those deliverables.
Yes, that all makes sense, Rob.
Okay, this next question, I'm going to combine two of them because we're running out of time, and I think it's an important question. They're asking, what is the ideal type of business to target? Is this a medium to large size business? Is there an ideal description of the type of business that retains agencies for retainers? And how long how long is an ideal retainer basis? Is that an individual question per client, or can you even answer that question?
I'll start at it, Rob. I think because of the growth in digital and because everyone wants to be involved in terms of advertisers and marketers, it all depends on where your agency's sweet spot is. If your agency is in the mid-market, I think any type of advertiser right now is looking to grow their digital business, and their digital business is going to include a good opportunity for retainer-based services, as Rob has been saying. So I think depending on what your agency is capable of handling, there's business to be had at the small market end, the mid-size end, and the enterprise end. And I think whether the company has been around for a while or is a new company, there's opportunities there in each situation as well, because companies that are new and may want to just jump right in to social marketing or paid search or anything that's digital that can be retainer-based, they're going to need help getting off the ground. So there's a great opportunity to get in at the ground level versus enterprise companies where there's always room for growth. We find that a lot of times larger brands operate in silos where you can have a separate social department, a separate search department, a separate traditional department. There's opportunity in all of those places. It just needs to be approached or targeted a little differently. Would you agree with that, Rob?
Yeah, I think that's a good summary. Look, there is retainer-based services opportunities across the business spectrum, as Karen said, from enterprise down to the smallest business. I think two of the real things to look at, whatever type of client you target, small, medium business up to enterprise or vertical market specific or broadly, two things to look at. One is if you have a specific area of expertise where you know that you can do things better than an in-house option in terms of providing results or really sort of expanding their knowledge, that's useful. Or you know that they just don't have the resources, and your prospect doesn't have the resources internally to execute something. They may not have anybody in-house with any of the expertise, or they may have a business objective that means they need to do, 3, 4, 5 times as much of something as they were doing last year, and they just don't have the immediate expansion capabilities to get there. And so they can turn you on much quicker than they can go into some big, long hiring process to ramp three new heads to execute on that business objective or whatever. And so I think those are some areas where there's an opportunity, again, if you get to uncovering business objectives with your client.
Okay, thanks. Thanks very much, Rob and Karen. Really appreciate your information. I know the audience had some great questions too, and if you have more questions for Optify, their contact information is right there in the slide I put up there. You can either go through Optify.net or reach them by phone. They give your direct phone line, so call away. I'm sure they'd love to hear from you. That is all the time we have for our broadcast today. We look forward to seeing you next time right here at Digital